I'm a property accountant, and through my accounting business then, I've helped dozens of property investors optimize their Xero accounts. So in this video, I'm going to give you some more advanced pointers on how you can optimize Xero for your property business. I'm going to start off with showing you how you can revalue your investment properties in Xero and how you can track deferred taxation. I'm going to teach you that if you're profitable, how you can pay yourself dividends. Show you how you can correct multiple errors using the Find and Recode feature. I'll show you how to add a fixed asset such as your mobile phone or a computer. I'll show you how you can process tenant deposits, how to adjust rental statements for the fees which are deducted by managing agents, such as letting fees and maintenance. And finally, how you can run custom reports to show the individual profit and loss of each of your properties. This video follows on from an initial training video which takes you through the basics of getting your Xero account set up, including setting up a standardized chart of accounts for property investment. So if you haven't already watched that video, make sure you do so first, because this is going to follow on from it directly. Okay, so the first thing you're going to need to do then is go into reporting and balance sheet, which we're on now. Make sure it's today's date, and that's going to show you all the different held values of your investment properties as per your balance sheet. So we can see here we've got Cliff Road and Station Road, and if you look back onto the previous iteration of the training, you'll see that I showed you how to put those two investment properties, how to treat the purchase using a manual journal. So what we need to do now is we say it's the end of the reporting period and we want to actually revalue that property. And so this is the current value, 87,864.96 pence. It's an uneven number because remember it was the purchase costs plus the purchase price, so that's what it came to. But we're going to say at the end of the year now it's worth, in our view, £100,000. So we need to make the difference of 12,135 and 4 pence. We need to do a manual journal to make that revaluation. So what we'll do now is we'll flick into manual journals. I'll show you how. Okay, so once we're in manual journals, we're going to click New Journal. We're going to put the date at which we've done it. So remember we said the end of the reporting year for this property in particular was the 31st of December 25. We're going to give plenty of information in here, so we're going to say it's Cliff Road property revaluation, and then we're basically going to click those two down. We need to choose which account into codes, so we're going to use, there's two we're going to use. Remember we've already set up our customized chart of accounts. This is going to be straightforward. We've got a specific investment property account for Cliff Road, and we've also got one for revaluation of property. So in UK accounts, if you're reporting as FRS 102 small company, which for most property investment companies I would recommend you do because it means you revalue the properties every year, value in the balance sheet. And the second one is showing the increase as a unrealized gain in the profit and loss statement. So remember we're going to use the tracking categories, so we're going to put it as Cliff Road for both of them. And then we just need to put the amounts in. So first off, to start off with the asset then, so because we're increasing an asset, remember in the basic principles of bookkeeping, if you increase the value of an asset, it's a debit. So that's going to be for 12,135 and 4 pence. And that's just the difference between the value it's currently sat in the balance sheet and the value we want to bring it to. So that's the difference of the two. And then every debit has to have a corresponding credit for the same amount. So in this case, it's going to be a credit, and with bookkeeping, credits increase income. So the revaluation of property is an increase, and so that's for that reason. Then that journal is now correct. What we do now is click Post, and now let's go back to the balance sheet. So just make sure it's today's date. What we can see there is that you can see Cliff Road, the value has now changed. It was the same as Station Road before. Now it sits at £100,000. So what we can see there is we've revalued the property, and we could do it with the other property if we wanted to as well. So another thing to consider then, this is UK specific. If you're reporting using FRS 102 as a small company, as I said, is if you have an investment company, then FRS 102 small company is the way to go, because it means that every year your property is being revalued. That means they're going to show an accurate reflection of the actual value of your properties, rather than using FRS 105 micro entity, which means that basically the property is held at cost, what you purchase it for, plus the costs, and it stays that value on an enduring basis. You may even need to depreciate it. So for property investment companies where the value is going up, FRS 102 is the way to go. But another thing you need to consider as well is deferred taxation. So basically for that revaluation, because it's gone up in value, it's being charged to profit and loss. In fact, I'll show you that now. I'll show you profit and loss. You go reporting profit and loss and open that in a new tab. Yeah, you can see the bottom there, we've got a revaluation of property 4 pence. So you can see that we've got on the balance sheet, the amount of the assets increased. On the profit and loss, yeah, there's a revaluation of property. So another thing we're going to have to consider is if it's a UK company and we're reporting under FRS 102, then we're going to need to do something called deferred taxation. The easiest way to describe it is you have current tax, so that's like if you make a profit in your accounts, at the end of that, you're going to have to pay corporation tax on that. But if you have property revaluations, so the revaluation of our investment property, and that goes into the profit and loss, as I showed you before, then we're going to have to track something called deferred taxation. So basically that revaluation is an unrealized gain. When it becomes realised, I mean, we sell that property, we're going to have to then pay tax. And under FRS 102 reporting, we're going to have to track something called deferred taxation. If you need a further explanation of this, your accountant should be able to explain to you how it works. But what we can do is we can do a separate journal for deferred taxation. So I'm just going to show you how to do that now. So I would definitely recommend having it as a separate journal to the property revaluation, but you're going to need to refer back to the revaluation to know how much tax to pay. So again, go back to journals, we're going to click new journal. I'm going to call it deferred taxation, Cliff Road, investment property. Just add as much detail in here as you can. It's going to be the end of the year. And again, you've used the chart of accounts, which I've given you. There's already 2 accounts for deferred taxation. So I've basically put one, just to remind myself, there's one in the profit and loss. There's one in the balance sheet, which is deferred taxation. So basically every year, assuming there's property revaluations, there'll be a charge to the profit and loss statement. And then every year, those amounts are all sent to the balance sheet as well. So you'll basically get a cumulative total in the balance sheet of all the deferred taxation. So again, put the same details of the property in here, Cliff Road. So it's all tracked using tracking categories to a specific property. Right, it's beyond the scope of this video to tell you how to calculate deferred taxation. You need to speak to your accountant. I'm just going to use an incorrect number just for the purpose of showing you how to do it. I'm not going to actually calculate the correct deferred taxation amount. So let's say in this case, the deferred taxation figure we've calculated or our accountant has told us about is £2,500. That's also going to go as a credit in deferred taxation because you've got just going back to bookkeeping basics then, you've got debits increase expenses and the deferred taxation and the profit and loss is an expense. And credits increase liabilities and the deferred taxation is also a liability which goes into the balance sheet. So that's why you've got a debit and a corresponding credit. And now I'm going to click post. What we can do now is just check that's gone into the balance sheet and the profit and loss. So let's start off with the profit and loss. We just click refresh. You can see deferred taxation has been put in there. You have to excuse the order of this profit and loss is not in the right order. If I was going to spend more time on it, I would put it in the correct order, but just to give you an indication that it's gone into the profit and loss, that's going to go under a taxation figure rather than an admin costs. But it just gives you an idea to show it's worked. And then under the balance sheet, if we just click refresh, we can see that deferred taxation has gone as a credit as amounts falling due after more than 1 year. So it's gone in the profit and loss and in the balance sheet. So it's the transactions have taken place. We've revalued the property and we've processed deferred taxation. Right, next I'm going to show you then how you can pay yourself a dividend in Xero. So watch in now. Okay, in this demonstration I'm going to show you how to pay yourself dividends in Xero. So you can start off from your dashboard page, which will look a little bit like this. The first thing to note is that there isn't an account for dividends in your default chart of accounts. So we're going to have to create one before we can pay ourselves dividends. So we're going to click on accounting and then chart of accounts. Okay, once we're on there, we're going to click on equity. We're going to look for a number code which is free. I'm going to click add account. So in this case, we're going to go with 965. Account type is going to be equity. And let's call it dividends paid. And then click save. Okay, once this is complete, then we're now going to do a manual journal. So we're going to click on accounting, manual journals, and click new journal. I'm going to start by giving it a description, put the day's date in. Now, the best way to do it is we're going to basically add the dividend to the director's loan account. That means that the director then is able to withdraw that dividend as they please in their own time. So two different account codes we're going to use are dividends paid, which is the one we just created, and then director's loan account. Okay, so as with all manual journals, basically the amount in the debit column needs to equal the amount in the credit column. So basically what we have is, as with accounting transactions, we have two different transactions. One will be a debit and one will be a credit. So in this case, because the director's loan account is going to increase the liability, it's a credit. So in this case, let's say the dividend we're going to pay is £500. So in the UK, that is the amount of the annual tax-free dividend allowance. And so any dividend higher than that will result in a personal tax liability. Obviously, if you're watching this and you're in a different country, the rules will be different. Okay, so basically you'll see there's two corresponding transactions. There's a debit of £500 for dividends paid, and then a credit of £500 in the director's loan account. And the date, I've used the day's date of being 1st of June 2026. Now I'm going to click post. Okay, now let's just check it's worked. So let's go on to accounting, balance sheet. Okay, so on the balance sheet, we're going to make sure the correct date is in. So 1st of June 2026, I've used as being the day's date. What we can see then is it's worked because there's a transaction or a balance showing in the capital and reserve account for dividends paid, £500. Okay, so we know that the dividends worked, which is good. So what we're going to do now is we're just going to show you what the issue is and how we need to rectify it to make sure that the accounts don't still show dividends paid when we go into the next year. So what we'll do then is we'll click in a date for the following reporting year. Okay, so with this company, we're assuming that the reporting year ends the 31st of March. So we paid the dividends in June 2026, and they were for the accounting period which ended in March 2026. And what we can see there is that there's still, as we go into the next financial year, so the one that ends in 2028, we can still see that the dividends paid is still showing as a balance in the balance sheet. So that's something we need to rectify. So I'll show you how to do that now. So we're going to have to do an additional manual journal. So click on accounting, manual journals, new journal. We're going to call it dividend journal. And the date needs to be the first day of the reporting period after the dividend was paid. So we paid it in June 2026. So the 1st of April 2027 is the right date for us. So that's the first day of the reporting period after the dividend was paid. And what we'll do is, that'll copy down the description. And there's two accounting codes we need to use. The first one is dividend. So this is basically to remove that dividend balance on the balance sheet. And the next one is retained earnings. So basically dividends are paid from retained earnings within the company. So if there isn't retained earnings, you can't then pay a dividend. So what we need to do is basically cancel out that dividends paid transaction and reduce the amount of retained earnings because we've paid some of that out as a dividend. Remember, it's £500 that we paid out as dividends. So let's show you how to cancel out the dividend. So it's two different transactions. Again, it'll be a debit and a corresponding credit. So in this case, we're going to put in the £500 for dividend paid and £500 for retained earnings. Remember last time with the dividend paid last time, we use a debit. So this time to cancel it out, we use a credit. So it's going to be £500 there. And then £500 as a debit in retained earnings, which is then going to reduce our amount of retained earnings. So what we're going to do now is click post. What we'll do now is go on the balance sheet and just check it's worked. So accounting, balance sheet. Okay, so just check it's worked. So we can see that at the end of the financial reporting period that ended the 31st of March 2027, remember we paid out the dividend in that reporting period. We can still see the dividends paid showing there. And if we click to the following day, which is the start of the next reporting period, let's do that now. What we can see is the dividend transaction balance has been removed and the retained earnings have been adjusted accordingly. So I'll just show you again to make sure you can see it. So you've got dividends paid there showing as negative 500, retained earnings 4,931. We flick to the next day. Yeah, you can see there retained earnings has been reduced and the dividend transaction is gone. If you've made mistakes in posting transactions to the wrong accounting code, sometimes this can add up to dozens of different transactions. Here's a quick way to correct it using Find and Recode feature in Xero. Watch in now for a demonstration. It happens quite frequently in Xero. You accidentally post a transaction to the wrong accounting code, and it can be if you're using either rule or some of the ways I'm going to show you now. It could mean that multiple transactions are posted incorrectly, and there's a really quick and easy way to change them. So what I'll do now is I'll just show you through use of a demonstration. So we've got here a series of transactions which are all basically identical but different dates, and you can see there the provider is E.ON, which is a utility company, and this is for utility bills. So I would hope your utility bills weren't that high, but potentially they could be. So what I'll do is I've got a separate video where I show you how you can process these transactions. There's a number of different ways of doing it. Could be either by putting the receipts directly into HubDoc for use of a bank rule, or the way I'm going to show you now is by basically using Xero's kind of machine learning to put in the details of one transaction, and then Xero will then remember that and apply it to others. So let's have a go then. So this is the who is E.ON. We'll have to create this new contact. And then we're going to put the account in. So remember, I'm going to demonstrate this incorrectly. So and probably an easy way to fix this by changing the names, but I use rents receivable for kind of the rent you receive, and then rent and rates for things like utility bills and council tax bills. So they're two different ones. Obviously, rents receivable is for income, and rents and rates is for an expense. And in the past, I've got them mixed up, and probably on me, I should probably change the accounting code name so it's less easy to make a mistake. For the purposes of this, though, I'm going to accidentally post all of these transactions to rents receivable. So here we are, 200. You put a description in there, utility bill. Then I'm going to click OK. What you can see there is this is how clever Xero can be. It's basically applied the same details to each of them. It's incorrectly put 20% VAT on income. I could change that by setting up a rule, which I'm not going to do for the purposes of this. But what I'm going to do is I'm just going to click OK for all of these, and it's going to then process the transaction. And what's happened now is then if we go on to the profit and loss account, you'll see that basically I'll be able to realize that I've made a mistake. So I'm going to click on accounting, profit and loss. Okay, and so what I'm doing is as I'm reviewing my my Xero account before I go to then create the accounts, I'll be clicking in each of the transaction categories to check them, because sometimes That's the way you can spot if a mistake has been made. Let's click in rent receivable. And what you can see there is there's a series of Eon transactions. So, and you can see also that they're debits rather than credits. And so what we can see here is then this is obviously an error. I realize now I've made a mistake. I can see that I've posted these to rents receivable rather than rent and rates. So what I need to do is then find a way of quickly adjusting them. So one way could be, if you had time, is just to click into each of the transactions, which I'll do now. I can click on options, edit transaction. I'm then able to change the account. There's actually a quicker way to do this because you might find, if, like I say, if you've made this one mistake, you might have made multiple mistakes and it could take a long time to check it. So what I'm going to do is I'm going to click on accounting and then find and recode. Okay, so this brings you to the find and recode page. You can click play here to get a bit of a demo on how to use it from Xero. But that's what I'm going to do for you in this video. So what we're going to do is then click find and recode. And how this works is basically you apply a series of conditions, and that basically enables you to search for these particular transactions which are incorrect and then make the adjustments. So I'm going to add a condition. So let's see. So we're going to go with account. So I know I incorrectly posted it to rents receivable. So let's type in that 200 search. So that has picked up the transactions, but it's also got a number of other transactions as well, which aren't relevant to what I'm trying to recode. So I need to add another condition. So click add a condition. There's a number of ways we could do this, but probably the easiest one is I know that they're all made to Eon. So if I can filter it by Eon, that's going to make it easier. So let's try that now. Eon. So that's there. What's going to happen now is that's going to narrow down my search. And it's basically picked up all of the relevant transactions which were incorrectly posted. So let's have a look now. I'm just going to check through them now. So what I'm going to do now is just going to check all these transactions are the ones I was searching for. I can basically click this box here. It's going to basically select them all. Then I'm going to click Recode. And it gives you an options on things you need to change. So in this case, the contact is Eon. That hasn't changed. It's the account in this case which is incorrect. So actually I want it to go to rent and rates, not rent from receivable. So I originally put it as rents receivable, which was incorrect. I want to put it as rent and rates. There's also the option here to change the tax rate, for example. For property investment companies, VAT isn't going to be applicable, but if you, depending on what other activity you're conducting, then you may have VAT may be a consideration. So I'm just going to leave this for the purpose of this demonstration. What's going to happen then is going to click review. And it's going to basically give you this this page here. It just says it might take a while to do. I'm going to click confirm. And what we can see there is a summary page comes up and it shows you that that has been completed. So let's just check now that it's worked. So if we click into accounting, profit and loss, we can see now rent and rates has a number of transactions in it. They weren't there before. So let's click in there. And we can see all of those transactions that were incorrectly posted previously to rents receivable are now in rent and rates. So what you can see is this is a really good way of basically recategorizing multiple transactions at the same time. It's a really quick way of doing things. So if you purchase a mobile phone or computer for your property business, here's a demonstration as to how you can add it as a fixed asset in Xero. Okay, so the first thing we're going to do then is we're going to go into HubDoc. This is the software which is linked to Xero. It comes free with a Xero subscription. It basically enables you to insert your receipts directly and link them into Xero. There are other options. There's paid for software you can use as well, but this is a free one included with your Xero subscription. And for most kind of property investment companies, it should be sufficient. So the first thing to do then, there's different ways to do this. You can either drag and drop a file into there, or we can use the HubDoc app to insert our receipt that way, or even email it to a bespoke email account we've got for our HubDoc account. So I'm going to drag and drop. Give it a few seconds just to kind of process. Then we're going to see a receipt has arrived inside. Okay, it's got the duplicate button on mine. It won't have it on yours. That's because I've already processed this earlier just to save time, but I'm just going to show you the steps I went through. So we can see an invoice from Currys. We've got a number of different items in there. Total amount then is £1,339. What we're going to do then is go through and make sure all the details of the receipt is correct. So I'm going to click on here, receipt. I've got the suppliers correct, Currys, the date's correct. The total amount is correct, as is the VAT amount. So now I'm going to click below and make sure the Xero destination information is correct. So it's a purchase, awaiting payment, and the contact is Currys. And now we need to click the accounting codes. What we can do actually is, because there's in this case there's different equipment that needs to go to different accounting codes, we can actually click multiple. And what we can do there is we can add the details of all the different items in the invoice. I've grouped some of my items together as consumables. However, you could also go through and do it in full for each item. Then I click Save and Close. Okay, and once I'm happy that the amounts add up, I'm going to click Publish. Okay, now I'm going to go into Xero, into my dashboard, and into the relevant bank account. In my case, I purchased on a credit card, so that's the relevant account. And what's going to happen is, because I've put the invoice through HubDoc and I've put it through correctly, it's going to link it to the relevant transaction. It's going to be highlighted green. I'm going to click OK. Okay, so that's basically put the transaction through. The next thing to do is register the laptop as a fixed asset. So I'm going to go on Accounting, Fixed Assets. Okay, and what we're hopefully going to see then is, because we've linked that transaction to one of our fixed asset accounting codes, it's automatically put it in as a potential fixed asset to register. So it's got in here Apple MacBook Air. It's got the correct purchase price. So what we're going to do is just click into this asset. So make sure the asset name is correct. Check the purchase date is correct and the purchase price is correct. You can put warranty expiry details in there if applicable, and the serial number to provide more detail. We're then going to click asset type. If this was the first time you've done this, you're going to click new asset type, and so I'll take you through that just to show you how it works. Okay, so once you click onto a new asset type, basically you have different categories for the different assets that you hold. So I've got one called computer equipment, and I include in that mobile telephones and computers, but you could have different categories. So let's try setting one up. So computer equipment, new. You then have to basically select the relevant asset accounts. So assets basically appear in your balance sheet. So they're the assets of the company. So you need to make sure there is a requisite asset code in the statement of accounts, chart of accounts, sorry. So in this case, I have one for computer equipment. If you don't, then you need to create one, and you can go to do that. You go into accounting, chart of accounts, and then you'd set up a new accounting code. So I'm going to search for computer equipment, and there, happy days, there's already one there for computer equipment. You then need to have a separate account for accumulated depreciation. So what I mean by depreciation is we have assets in our company, our business, and they have to be so assets have a useful life, and basically over the period of that useful life, we have to reduce their value. This is called depreciation. And so we have to have a set account for depreciation to go into, just so it doesn't get muddled up in the same asset account as the computer equipment one. So in my case, I've got accumulated depreciation on computer equipment. You could call yours similar. We then need to have a depreciation expense account. So the accumulated depreciation account is where, on an annual basis, all the depreciation for that year will go and basically reduce the value of that computer equipment. But then we also have an annual expense. So the annual expense goes in the depreciation expense account, and then the sort of cumulative depreciation all goes into the accumulated depreciation account, meaning that it's tracked over a course of multiple accounting periods. But the annual expense goes in the profit and loss, and this goes in a expense account. So in my case, let's search for depreciation. Got depreciation expense there. And you could separate that into depreciation of computer equipment, just so it's a bit easier to track. Okay, we now have to choose which depreciation method, and there's a few to choose from. Straight line or reducing balance. The straight line is fairly straightforward. So you have your asset costs £100. Straight line depreciation would mean that you said it was going to depreciate by £20 every year, and so every year it goes down by £20. Or you could be a percentage as well. Reducing balance is slightly different. We say that there's it goes down by 25% every year, and so the first year it goes down by 25% of the full value, but then the second year it goes down by 25% of the new value at year two, and so the amount it goes down by every year is changing on an annual basis. That's the key difference. I would just keep it simple and go for straight line. We then need to go for the averaging method, and you either go for full month or actual days. I only go for full month. So it basically means for every full month you depreciate. Actual days is the number of days actually that take place within the month. So I'm going to click on full month. And you can calculate the depreciation based on the rate or the effective life. So I'm going to click effective life. I'm going to make an assessment of how long I think this piece of equipment is going to last. So a new Apple laptop, I'm going to go with 5 years. 5 years of effective life. That's going to mean that basically that computer is going to be depreciated over its useful life, so over a period of 5 years. So I'm going to click save. Okay, so now when I go into to register the asset, it gives me options. I'm going to click on computer. The computer equipment new is the one I showed you before, but the computer is similar. It's one I set up earlier. Depreciation start date, and I'm going to go with the day we purchased the equipment, which was on the 20th of October. It's already straight line and full month, and it's effective life 5 years. There's options to put in cost limit and residual value, but I'm going to leave those blank, and I'm going to click register. Next then, here's how you process tenant deposits in Xero. Deposits that you receive from your tenants. So when you start up a tenancy, the deposit you receive, which you then have to protect, and how you deal with the transaction when you receive it from a tenant, and also when you pay it into one of the registered providers, such as My Deposits. This is a question I get asked quite a lot, so hopefully this video will make it nice and clear for you. So you're going to go into your Xero homepage, where I'm at now. So I'm on a demo company, but yeah, this is the kind of main page in Xero. We're going to then click into reconcile transactions. And just see we've got 2 new transactions you can see here. So on 21st of December, on the 21st of September, we had £1,000 received from T Smith, who, let's say, that's one of our tenants. the reference there is the tenancy deposit. So the start of tenancy, they've paid us a deposit, which we then need to protect in one of the registered schemes. If you use a letting agent, they may do this for you, but this is more aimed at those personnel, those landlords who look to self-manage their property portfolios. Okay, so T Smith, we've got a transaction received then for £1,000. And you can see we've got a corresponding transaction there. We've paid that same £1,000 because we're good landlords and do what we're supposed to do, abide by the rules. We've deposited that deposit in a registered provider, so in this case, My Deposits. So we've basically got two corresponding transactions for the same amount, which is correct. And we now just need to know how to process them in Xero. So the easiest thing to do is just to have set up two bespoke accounts in the chart of accounts for Xero for these deposits. That's going to make it really easy to track. And so I'm going to show you how to do that now. So we're going to scroll to the top. We're going to go on to Accounting, Chart of Accounts. Okay, so the first one we're going to do then is for the deposits that we've received. Okay, so we're going to go into Liabilities. And then we're going to basically look through our chart of accounts. We're going to find a 3-digit code, which is free. Okay, so in this case, I'm going to go with 921. It might be slightly different for yours. So I'm going to click Add Account. Click Account Type then. I'm going to go for a liability down at the bottom there. Now we're going to click the relevant 3-digit code that we thought of. So in my case, I'm going to use 921. It might be different for yours. And we're going to use a name, which is really easiest for us to know. So basically, just before I go on, it's basically a deposit that's received from a tenant. It's treated as a liability because essentially you haven't been paid that. It's not rent that you've received. It's a deposit, and you owe that money back to the tenant, assuming they abide by the rules of the AST that show on the tenancy agreement. So it's not treated like as an income. It's treated that you're basically holding the money almost on behalf of the tenant. So that's why it's treated as a liability. So a liability is something which your business and your property portfolio is a business. It's money which your business owes, and so it's treated as a liability. Okay, so once we've set up then this account, we're going to click Save. And now we're going to go into Assets. So now we're going to set up a similar account, but this is for the tenants' deposits that we've registered with one of the tenancy deposit protection schemes, such as My Deposits. So we're going to again look through our different accounting codes. We're going to find a spare 3-digit number which hasn't been used yet. So I'm going to go for 772 for deposits. So I'm going to click Add Account. Account type then. This is going to be assets. So I'm just going to look through which one we're going to use. Let's go with a non-current asset. Code I'm going to use then, as if in my case, it's going to be 772. Yours might be slightly different. I'm going to call this tenants deposits protected in scheme. You can call it slightly different, but as long as it's something you know what it is, and you just need to make sure you don't get mixed up between this one and the other one we set up. So one's for deposits we've received from our tenants, and the other one is for deposits which we've then protected. And so the difference is this is treated as an asset. So basically, the tenancy deposit provider holding the money on behalf, or actually of the tenant, but the money is basically almost treated like it's owed back to our company, and then the company then in turn owes the money to the tenant, and that's why you've got these two accounts. So if we set up this non-current asset 772 and click save. Cool, so we've now got our two accounts. So what we're going to do now is go back to Xero, the dashboard. Okay, then we're going to go back to our transactions. So we've got reconcile. And then we go scroll down to the bottom. Okay, so we've got the two different transactions we saw before. So let's just enter them as in manual. So let's go with T Smith as the contact, because that's the tenant's name. And then what is, and it's asking us which accounting code. And we've got this one we set up, remember, 921, deposits received from tenants. So we need to make sure we can differentiate between the two different accounts we set up. This is the one for deposits received from tenants. And we can put in a bit of detail here. So deposit for, name of property. Put the address in there so you can remember going forward. Make sure I spell that correct. And click OK. Then for the next transaction, we're going to do similar. So we're going to put, in this case, my deposits. New contacts, and then again, this one we're going to use the 772 deposits protected in relevant scheme, the 772. Again, put on the information, so put a bit of a description so you can remember going forward what it is. So deposit for name of property. Then click OK. Okay, so what we'll do now is we'll just take you over to the balance sheet, and you can just see, because that's these transactions, because we've treated them as liabilities and assets, they don't go into the profit and loss, they go into the balance sheet. The balance sheet shows what the company owns and what it owes, and so that's why the deposits go into the balance sheet rather than the profit loss. It's not income you've received, it's rather they're assets and liabilities. So let's go to the balance sheet now. And what we can see there, we've got two different transactions now. So I'll just highlight them so you can see. Got first one, we might probably move around the order of where these are, but we've got tenants deposits protected in the scheme, so that's treated as an asset. And then deposits received from tenants, that's treated as a liability, so something the company owes. And what's going to happen is, if that deposit is then paid back to the tenant, then it's straightforward enough. You'll receive a transaction back from the deposit scheme, and you'll just tag that to the relevant accounting code. And then the same for paying it back to the tenant. You'll then tag it to the relevant code, and then eventually it will basically empty out both of the two accounts. The only kind of slight difference might be if, as quite often happens, if a deposit, if say a tenant causes some damage to the property and then they don't get all their deposit back, what's actually happens then is the deposit is treated as rental income at that point, the amount that you receive, rather than as a deposit. And then so then you'd have to the deposit received back from the deposit scheme, and it's going to go to you to pay for damage, is treated as rental income then. So once you receive rent from a managing agent, you'll find that the amount that goes into Xero through your bank account is actually the net rent received. So they've already deducted their fees and potentially any maintenance from the amount they pay to you. Here's a demonstration now about how you can use manual journals to adjust for this, to make sure that your profit and loss account is accurate and not understated. Just an example then of a snapshot of a statement. So you've got then, it shows the amount of rent which was paid by the tenant, £900. Then you've got management fees which are deducted, and then Obviously VAT is applied there, so the amount there is £124 and 20 pence. And then you've got the payments to landlords at the bottom. So that's you can see there, that's the £900 less the £124 and 20, bringing you to a £775 and 80. So if you to look in Xero, the transaction for this rent would be £775 and 80 pence. So it wouldn't take into consideration the management fee and therefore the additional rent that you received. And so if you use this £775 and 80 pence figure, then your accounts are going to be wrong. And yeah, for those people who are lucky enough to have multiple properties, you might want to create some kind of spreadsheet like this. So I've just used Google Sheets here. Basically, you want to collate multiple properties, the amount of letting and professional fees. So that's the kind of agent's commission, maintenance. They're probably the main ones you're going to come across. And so you could do it for each of your properties. You could do it by month, or you could just total them all up as a one-er. This is just a really simple one. So you remember the property we just reviewed, then it was the letting fees were £124 and 20 pence. So I'll just add this figure in there. And you'll see this is just totaling up for that property and a second property. So it gives you a total amount there, and we can collate that, and we can use these figures then when we go into Xero to make the required adjustment. Okay, now I'm going to show you how to make the adjustment in Xero. So what you're going to need to do is go on to, on the main page of Xero, accounting, and right at the bottom, manual journals, and then click new manual journal. So first you give it a name, so let's call it net rent adjustment. We give it a date, let's go with today's date. You need to basically set up 3 different transactions. So this is to account for the amount of agency fees, the amount of maintenance fees, and also the adjustment to rent. So basically drag these down. That basically take the name from the title of the journal. There's 3 different accounting codes. Let's do letting and professional fees, that's for the agency fees deducted, maintenance fees, repairs and renewals, and finally rents receivable. Okay, what we should do then is we should, using tracking categories, which I've recorded a different video on this and how to do it, we should put the details of each property that it applies to in this. But for now, we're just going to make the adjustments for the letting fees. So if I refer back to the other table, we had total letting professional fees of £624 and 20 pence. 624.20. And then we're going to do the same for maintenance fees. So total maintenance, we can see there was £200. £200. We then have one more adjustment to make, and that is for rents receivable. And so this is a really easy one to do. So basically, the amount of rent needs to be adjusted will be equal to the amount of the costs that were deducted by the agent. So in this case, £824 and 20 pence. And that is the adjustment there. So I just want to quickly explain what it all is. So we use something called debits and credits in accounting. And so debits, we'll use debits for things like expenses. So in this case, the letting professional fees and the repairs and renewals. We use credits to include things such as income received. So that's why rent receivable needs to be a credit, because it's income received. If you're not sure about what debits and credits are, you might want to potentially use an accountant or a bookkeeper to help you with this when you're using your Xero. But if you're happy with it, then yeah, this is what you need to do. So what we're going to click there is to post the transaction, and that's then going to basically mean the transaction goes into Xero. Okay, final piece I'm going to show you then is how you can set up customized profit and loss statements for your properties, which is going to show the profit and loss of each of your different properties. Okay, so we start off from the home page for your property company on Xero. What I'm going to get you to do then is click on accounting and then reports. Okay, once we're in reports, then we're going to scroll down and click on profit and loss. So it'll be under financial statements, profit and loss. Before I continue, there's a couple of things, there's a few prerequisites. So in order to be able to do what we're about to show you now is you need to have already set up tracking categories for your different properties. That essentially enables you to have the ability for each of your different properties, the ability to tag a specific expense to that property. I've already made a separate video on how to do this, and so I'll link that in the description of this video. So make sure you do that before you continue with this. Otherwise it's not going to work. What we're going to do then is we're going to click on Edit Layout at the bottom left. Okay, so we've now clicked on that button. We're now going to click onto columns see at the top there, the kind of blued out box. So click columns, and then we're going to scroll down to the bottom. It says tracking. Basically need to repeat that for the number of different tracking categories that we've got. So I'll go off 3 properties as an example just to show you. So I'm going to click columns again, tracking again, and I'll do it one more time. Then what we're going to do is we go click on each of these respective dates which have a column, which have a date at the top. And you see in there, in the properties is my tracking categories are labelled as properties. So we click on this here, it'll open out the options for different properties. And what I do with mine is, just so I can remember them, I basically have like a kind of a code, which is a shortened version of the address. You might want to write it out in full in yours when you set the correct tracking categories. So I'm going to click on one of my properties there, and then I'm going to scroll down to the bottom. Yeah, and then you can see there, it's changed that column to the respective property. So I'm going to do that now for each of the other ones. So let's give that one of the different properties. And then finally, go with it. Okay, so now we've got 3 of our different properties in there. Obviously, you would do this for all of the properties you've got. I just want to show you for illustrative purposes, though. So you've got 3 different properties in there. What we're going to click now is Update Layout. So what you can see now is you can see that it's worked. You'll have basically the first column will always be the total, and then to the right hand side of that, if you set it up like I showed you, you'll have basically each of your properties. And if you scroll down, you'll be able to see you've got basically a profit and loss statement for each of your different properties. This can be really useful for you to then to be able to monitor your different financial performance of your different properties over time. So what we need to do now then is, once we're happy, we're going to click Save As a custom report. I would then give it a sort of its own name, so we'll call it Profit and Loss by Property. And if you want, you can make this the kind of default report. And I'm going to click Save. I'm not going to do this because I've already got one set up, but if you click that, then that'll be the default profit and loss statement for you. Click Save. Okay, I've already got a name. One called that. Click Save. And now, just to check that's worked, what I'd do is click on Accounting Reports. And if you go down to your custom reports, there it is there, Profit and Loss by Property 2. If you basically select that star next to it, that will mean that report then is when you go onto the search bar for reports, that will come up as a default one. So I'm just going to save this and I'll show you how that works. So if we can go now on Accounting, we can see there that because we put that click that blue star, that's one of the default reports. It'll be there to enable us to click on it from the search bar. And yeah, just to show you here, so you can see that it's worked. It's taken me to the correct report, which is really useful. This is the main one you really need. So just as long as you've got a profit and loss by property, you'll be able to see the different financial performance of each property. Hope you find this video useful. If so, please remember to like and subscribe for further content. If you've got a UK property investment company and you need some accounting or Xero support, you can find details to my accounting business in the description below. If you're an international property investor, I've also got a link in the description to a school community which includes unlimited Xero support. Further detail in the description below.